UiPath just reported its earnings and the numbers absolutely shocked investors. I'm not exaggerating. UiPath didn't just beat expectations, they posted the kind of financial shift that can change a company's entire trajectory in one quarter. So today I'm walking you through the exact numbers that the market didn't see coming and how each one could drive UiPath's stock massively higher over the next few years. If you care about AI, automation, or mid-cap tech, this is the one earnings breakdown you cannot skip. Stay locked in, the numbers are crazy. If you're new, UiPath builds automation software for enterprises, but automation today is not just robots clicking screens. It's UiPath is becoming an AI platform that large companies literally depend on to reduce their costs and scale productivity in the workforce. So think of it like the nervous system, collecting all the software inside major companies, and that's why I think that this quarter showed that UiPath's financials are finally catching up to that vision. And as we can see, the stock price is up after hours pretty hugely. So let's start with the numbers that shocked almost everyone. Heading into earnings, sentiment was low, investor stock growth was slowing, and expectations were pretty flat. But UiPath walked into the earnings call and dropped numbers that forced a lot of analysts to rewrite their models on the spot. And I think that's why we've seen the stock increase. And now let's go metric by metric and break down how each number leads directly to the stock growth in the future. So first one on the list I got is the ARR, $1.782 billion as of October 31st, 2025. ARR, it didn't just grow, it jumped about $176 million in 1 year. This can push the stock higher because more ARR means more predictable revenue, which means higher valuation multiples. UiPath is approaching $2 billion in recurring revenue, which is a psychological and financial milestone for the company. And companies with ARR at this scale usually tend to get re-rated, which is, we could see companies like Adobe or Palo Alto did in their early days. And I think this alone is a massive catalyst that we're watching in the future. Another thing I want to point out is the quarterly revenue of $406 million. This is very strong for the company, and it proves that automation demand is not slowing down. It gives UiPath year-over-year growth investors can project forward, and revenue strength is still early in an AI cycle that usually tends to lead to multi-year rallies. And I think UiPath really checked every single one of these boxes, and it's showing a lot of strength on the market. Another thing I want to point out is the operating income. We finally seen profitability has arrived. The GAAP income came in at 13 million, and then we see the non-GAAP operating income was 88 million. This shocked the market, I think, the most. And this drives the stock because when companies cross from losses to profit, their valuation multiples expand. Profitability opens the door to new institutional investors who don't touch unprofitable companies, especially inside the tech market, because there's a tons of companies. I could literally name 20,000, not 20,000, but there's lots of companies that are in the tech market unprofitable. You're investing in the future product, but UiPath showing $88 million in operating income proves it has real operating leverage, and that this is basically how the 10x story begins. Profits start to scale, and then the multiples will expand following that. So another thing I want to point out is the elite gross margins. These are some of the highest numbers we've seen in the entire industry, and they posted GAAP gross margin of 83% and non-GAAP gross margin of 85%. This matters for the stock because margins are what allow earnings to explode, even if revenue doesn't grow very quickly, which we've seen in the company. It hasn't grown insanely, but it's just grown moderately. But companies with margins above 80% historically become long-term 10x companies because this is the financial architecture of a future giant, and these margins allow them to continue to reinvest and have margins that these don't happen by accident really. And I think that it's something that they have done in throughput, and now it's just about scaling. So as we've seen, the free cash flow is also at $28 million, which is basically showing that they're not burning cash. It generated $28 million in free cash flow. Will this boost the stock valuations? Because FCF is the number big funds care about most, especially if you look at DCF models or anything like that. So positive FCF basically means that UiPath can fund all its growth internally without no need for dilution, no debt, and no balance sheet risk, which is something that a lot of investors worry about inside companies. Because I mean, worrying about dilution is one of the biggest things, and it could really wipe out gains on the stock market. So the market loves companies that can pay for their own expansion, and I think this is something crucial to watch in the next coming quarters. Another thing I want to point out is the cash pile. 1.52 billion as of October 31st. This is not market cap. The market cap's about 8 billion, I'm pretty sure. This is cash. This matters because it gives UiPath enormous safety during downturns, which we don't know really in this market. I mean, anything is possible. We see new news coming out with Trump pretty much every day. So they can buy, also with this, they can buy AI startups, which is obviously something we want to watch for. They can expand internationally and outspend their competitors if they need to in order to expand at the levels we need to. I was doing the math personally, and I saw that the market share is 150 billion for this in enterprise value by 2030 in total addressable market. And this means that they hold only 3% of the market, which I think they can continue to expand, especially with how strongly they are fortified and how strong the balance sheet has come in this quarter. This massive cash position reduces investor risk and increases their confidence. This is one of the strongest balance sheets in AI I've seen recently, and I think it is very telling of the stock and the company as well. So another thing I want to point out is the enterprise penetration is that the large customers are really exploding recently. As we've seen 2 years ago, the companies with customers over 1 million was way lower than it is today, and the total customers is also moderately growing. This will send the stock higher because enterprise customers grow spending far faster than small businesses. I mean, of course it's nice to have a company that's only giving you 20,000 every quarter, but you really look for these companies that are throwing millions at you, and they are large accounts that create compounding reoccurring revenue. And these customers don't churn; they in turn just expand, and they continue to bring in new partners. And that's how reoccurring revenue will double in the future and allow this to be a 10x stock. Another thing I want to point out is the net retention of 107%. Customers are basically spending 7% more than last year automatically. This is bullish because UiPath grows without even adding new customers, which is what every company really wishes to do. I mean, if we can make money without even having to acquire new people, I mean, that's the goal, right? So retention above 100% is the hallmark of long-term compounding companies. So this is exactly how we've seen companies like Salesforce build decade-long rallies and grow over time, and UiPath is showing the same pattern as they were in these early stages here. So I am very excited to watch this in the future, and these numbers point to the 10x potential because this is the part that most people miss. UiPath doesn't need revenue to grow 50% a year to 10x in value. It just needs the ARR to keep rising moderately, the margins to stay high, operating income to continue to scale, free cash flow to accelerate, and AI automation adoption to keep expanding, which I mean, obviously, I think we know that's going to be happening, especially if you've been following the tech market. People are calling it a bubble. I don't think it's a bubble. I know everyone uses AI. Every single person I've talked to uses it on a daily basis, multiple times a day. So every one of these things is happening right now, and I think it is setting the stock up for a phase where earnings can grow much faster than revenue. And that is the secret behind every 10x stock and why I see so much potential behind these numbers in this earnings report in general. So in my opinion, UiPath's earnings didn't just impress investors, they really changed the expectations. The company proved it can scale, it can profit, and it can lead the emerging AI automation wave. If ARR crosses 2 billion and if margins expand another 2 to 3 points, I think that UiPath will not stay at today's valuation very quick. And with AI adoption accelerating, the math alone supports massive long-term upside. With my personal price prediction by the end of next year inside the $40 range. So in conclusion, I think that UiPath shocked investors because the numbers show a company entering a new financial era. Nearly $2 billion in ARR shows real profitability. Not only this, but the strong cash flow, the strong balance sheet. I mean, it's fortified with 1.5 billion in cash, elite margins, and deep enterprise expansion. These are the type of numbers that build long-term winners, and that is why I was breaking it down for you guys today. And I think that if UiPath keeps this pace, this quarter could be the spark that starts the next major AI growth story inside of the stock market. So make sure you guys like the video. Make sure you guys drop a sub. Make sure you guys comment which earnings you guys have been looking at, what you guys think of this stock as well. I appreciate you guys for watching. I hope you guys had a good holidays. Thank you guys for 2,750 subscribers. I really appreciate you guys. Have a great rest of your day. Peace.